Toni, what do you think? We hit $1 trillion today, and what is your take in terms of where we go from there, if so?
Well, look, the $1 trillion is clearly a milestone that investors need to get psychologically comfortable with. But, Apple had a very strong report yesterday, and I think there are a lot of positive things for investors to take away from that. One, the company's buying back a significant amount of its shares. Two, we're seeing very strong price realization on iPhones, which I think is a testament to their product and to their brands. And three, I think numbers for next year might end up being too low in terms of what expectations are, because I think they may be able to take price again. So all of those things suggest that Apple could continue to perform well, and if it does, the stock should continue to do well.
And Toni, I'm looking at your note from yesterday. You've got a target price of $200. That implies that it's going to move lower. Explain that.
Look, the market goes up every day, and we don't move our price targets every day, but we do feel comfortable that the stock could continue to move from here.
Toni, where do you stand on this discussion about whether Apple as a stock can fundamentally get valued higher on a structural basis because of maybe the growing appreciation of the services business, even though it's less than 20% of overall revenue right now?
Yeah, I think that will take some time for investors to get more comfortable. You've seen a little bit of that re-rating, and the stock is towards the higher end of its historical range. I think the dilemma that investors struggle with is the iPhone is still 65% of profits, and it drives a big part of that services installed base. So, the company is still vulnerable, arguably 75 or 80% of its profit stream to iPhones. And there remains a question mark about whether the high-end smartphone market can ultimately grow. So I think it will take some time for that business to become a bigger part, and take some time for investors to feel more confident about the fact that iPhone perhaps can be a stable business going forward.
206.80, Toni, we're literally watching every tick here. There's been some discussion, some dissection of your comment to Scott Wapner yesterday that Apple's best days, if you had to choose, you said would be rather in the past than in the future. Did you mean that in sort of the context of a law of large numbers, or is there something about innovation overall that is naturally, have we naturally peaked on that front? What did you mean by that?
Yeah, it's partially a law of large numbers. I think there was a period where Apple's stock went up 100-fold in 15 years. So I doubt that's going to happen over the next 15 years, where the stock's going to go up 100-fold from $1 trillion to $100 trillion. So from an investor stock perspective, Apple's appreciation over the last 15 years is singularly one of the most, if not the single most, significant stock appreciation story of the last 50 years. So I just think from that perspective, from an investor perspective, those days won't be repeated. Now, the company's a different kind of company. It's $250 billion in revenue. It's $1 trillion in market cap. And so you are, by definition, going to have slower growth rates going forward. Doesn't mean the company won't be bigger. Doesn't mean the company won't have more outsized influence. And so I think, you just have to be careful about what the context of that question is.
And Toni, broader markets, the Dow right now, it's down about 90 points on these concerns around trade and the possibility that on $200 billion worth of goods coming in from China, those tariffs could be raised to 25% in the coming months. I realize that did not affect Apple and their Chinese business in the last quarter, but is there a point at which this becomes a risk to this company?
There is. Now, look, everyone is in the smartphone industry is largely manufacturing phones in China. And so you would have tariffs for all players. So from a competitive perspective, it would not impact Apple. Now, that said, if tariffs are enacted in the U.S. or something commensurate in China for phones, iPhone prices would go up, and there's elasticity for every product. And so I think you would see replacement cycles extend, and that could pressure volume. So it's clearly an issue that could happen. And again, we might see that impact through tariffs in the U.S. So the current tariffs don't really impact any Apple products except for the Watch and I think Apple TV. but they could extend more broadly to include the iPhone. And while China, could potentially tariff Apple products, I think the bigger issue is, could they react to tariffs in ways that could simply make it more difficult for American companies to do business in China, and that could have an impact as well. So, look, we don't know what might evolve, but there's certainly some risk to Apple and to the broader smartphone industry from escalating tariff war here.
All right, Toni, stick with us. Joining the conversation, we're also going to bring in former Zipcar CEO and venture capitalist Scott Griffith. Scott, thanks for joining us today. As we watch Apple inch ever closer to that $1 trillion market cap, $999.23 billion right now. What are your thoughts?
Well, I think it's incredible. We were actually on stage back when the iPhone launched with Steve Jobs. We were one of the first apps at Zipcar on the iPhone. And to think that was just a little over 10 years ago, and to see the market cap and the progress they've made is just, kind of an incredible run. I think the thing I watch now is what's the future? Where's growth coming from? It does feel like, we've sort of hit this sort of close to saturation point on smartphones and the iPhone. And I agree with Tony's comments. Growth is sort of be stagnant in that front at some point. But the future of transportation, where I spend a lot of my time, is it's shared, it's autonomous, and it's electric. And I think that's an area where Apple could really start to exceed expectations in the next 3 to 5 years, probably with some new interesting things that are coming. If it's about sharing and autonomy and electric, they certainly know a lot about technologies that will support that, and I think it'll be an interesting growth curve for them to watch that.
So Scott, it sounds like, and I've heard this from some critics, that you don't think Apple's behind the ball where autos and connected machines and vehicles is concerned.
Well, I think they have a real gleam in their eye for that space. They certainly have lots of share of mind of the customer already, and I think they're well positioned to do something really exciting. But I think right now they just haven't talked a lot about it. So right now I'd say Google has by far the lead because they have so much data and their autonomous operations, but I would never count Apple out on that front.